following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back once again to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as the ever-expanding, ever-insightful, ever-exciting Options Insider Radio Network. And if you haven't caught it yet, our latest show on the old network, the Options News Rundown, our daily dose of options, headlines, and breaking news for you. A little 5 to 10 minute treat to start your day and give you a great synopsis of what's going on in the world of options. Check it out, Options News Rundown. You can find it on our site and iTunes, Stitcher, TuneIn, Aha Mobile, wherever you find your podcasts of choice. I think you'll like it. And joining me on the old program today, we have our returning cast of regulars. Starting off in order of distance with the man beaming in the farthest, soon to be much farther when he moves to the sunny seashore of Maine. He is none other than Andrew Giovinazzi, a.k.a. the Rock Lobster from OptionPit.com. Andrew, welcome back to the program, sir.
Thank you. As always, it is great to be here. I'm only moving a couple miles from where I live, by the way.
Okay. You're not moving deep, far out to the old seashore.
No, I don't live very far. I'm already surrounded by water. I'm just going to another surrounding location.
You're not moving to the sunny shores of Nova Scotia or something like that.
No, I'm not going farther away. Now, that's what a lot of Mainers are actually doing because Maine's getting too crowded.
Really? They're jumping ship for Canada?
Yeah.
I was just thinking the other day how Maine must be just so crowded.
You know what? It's Newfoundland and Nova Scotia. Like, Maine's getting too crowded. Coastline can't deal with it anymore.
That's when you know you really have it in for the populace and humanity, when you decide that Maine is too crowded and you need to move farther north, farther into the hinterlands. Speaking of the hinterlands, that voice, dear listeners, maybe one you recognize. He is none other than Uncle Mike Tosaw, beaming in from the hinterlands, a.k.a. St. Charles, Illinois. Uncle Mike, welcome to the show, sir.
Always great to visit you from the hinterlands.
I have a new term for you every week.
I love it. This is just, you're like you are the thesaurus in my life.
There you go. You don't need the word of the day calendar when you do the option block twice a week.
That's right.
We save you that expense. Save you a whole $6 a year.
Yes.
Happy to do it, sir. And last but not least, we are joined by good old Alex Jacobson, a.k.a. the Viceroy, over there at Options Express. Alex, welcome back to the program, sir.
Hey, Mark. The desk has actually been busy last couple of days, so we'll talk about that a little bit, but good to be here today.
Glad to hear it. Glad there is some life over there in the land of OX that the retail folks are clawing their way back. I know a lot of the other people we work with in this space have been saying, wow, we're hitting the summer doldrums and it's only April. So they've been a little worried. So glad to hear that there are some sparks of interest over there at OX. And I think we'll get into those sparks right now in the trading block.
The trading block.
All right, and welcome one and all to the trading block. This is, of course, the portion of the show where we break down what was interesting, what caught our eye in today's activity. And you have to be careful when you prep for a show such as this, because what you may think is the theme, the narrative of the day around the midday can change by the end of the session. We saw some of that today. The market was decidedly mixed for a lot of the session today, and then towards the end of the day, it seemed to just catch a wind in its sales. The S&P and the Dow both closing up nearly 0.5% on the day. NASDAQ about unched on the day, and good old VIX cash ticking down about 0.1 of a point today as well. So toward the end of the day, getting a nice wind in the old sails and moving most of the major indices to the upside today. And a lot of stuff moving to the upside actually today. Perhaps we'll start with one of your favorite holdings, good old Uncle Mike. We saw good old Ford really catching a bid today, up about 3.5% to $13.55. This is the name that was trading $1 south of this just a few days ago. So a lot of love in Ford. Have you been active at all lately? I know you were eyeing those 12 puts. Did you ever get in, or you maybe roll into a bullish risk reversal? What's going on in Ford land?
Nah, stayed out of it. So it was a little bit too choppy for me. So I didn't want to. I felt it was catching a falling knife, but looks like I could have caught the knife by the handle had I done it. So in hindsight, which I'm sure no one's ever done before, but in hindsight, I should have just sold those puts, but I did not.
You know, it's funny. I guess I joked on the last show that I've been trying to give back my short shares for a while now, and Ford refuses to let me. So it's not one of the worst problems to have. I'll keep writing that 13 strike all day if they make me. But it's kind of fun to see it just vacillate so much, because it does make it interesting for a show like this, and for a lot of our options traders out there in the audience who like to trade some of the names that have a little bit of juice, a little bit of activity, but also aren't the $800 beasts that could really run them over. Ford is a good one for those listeners out there. Andrew, you guys watching Ford at all? You talking about it in your Option Pit Live lately?
No, I think that I like that strategy in Ford. I don't think it moves very far, so it just selling calls against it doesn't sound too bad. But that's not one that has really crossed our tape. We're actually looking at like some of the Asian indexes because of the weakness of the yen. Just actually just buying juice, because that market. You got the crazy North Korean guy rattling the sabers, and it cratered the South Korean market. So it looks like something there. And just with the yen collapsing, the Japanese market goes up like 1.5% every day. It's unbelievable. Just okay, here's another day. It's up 1.5%. So as far as trades go, we're actually just mostly unwinding some of that stuff now. But
you guys do a lot with Forex and options on Forex over there at Option Pit Live?
What we do, we just really work with the ETFs. We have a lot of our pro clients do look at just going to the futures and stuff when they want to. But mostly for just Option Pit Live, we try to keep it to more accessible vanilla stuff. And see if there's actually a trade there, and then people can take the idea and go convert it into futures or future options if they want. So, but that's sort of what we're looking at now. We're looking at always at volatility, always at the vol products, and watching. We're just hitting kind of a level where we don't. It's going to be hard for the VIX to go below 12. I think when we're moving 1% a day, I wouldn't want to sell it down there, but that's what we got. Ultimately, I actually this morning to our Option Pit Live clients, I said, it's not really a Bernanke put anymore. It's a Bernanke straddle. And the Fed they didn't sell everybody puts. I think they just sold everybody straddles. And the fact that all this cash is coming into the market, it's just been a very long time since we've seen more dollars pour in than dollars pour out. I think it's probably been since 2007 or 2006. So it is a market that is driven by all this cheapy pie liquidity, and it'll be around for a while, it feels like. So Don't know when it'll end, but
hopefully never.
Sometime it will.
Speaking of
never
dollars,
would be great.
Never would be interesting for a show like this. Speaking of dollars pouring in, Alex, you alluded to it at the top of the show that there was some activity, some business pouring into the old OX side of the fence today. Tell us what caught your eye amongst that activity today.
Yeah, today the desk was active in Chipotle, Priceline, Facebook, trading back over 28 for a little bit, and Apple up and down today. But there's the yen trade that Andrew talked about. I mean, last couple of shows I talked about the Japanese 10-year and what it has done. And, of course, I get all these emails that are like, who cares about the Japanese 10-year? But Japanese 10-year moved about 20% last week. And in the last couple of days, it's corrected right back to where it was. So interesting, the volatility. To Andrew's point, money's coming out of Asia. We still have operations west in Singapore and Australia. And the money's coming here. I mean, it's just really clear that there aren't a lot of other opportunities. Money's going to come to the U.S. This is a macro rally, I think, till Bernanke decides it's not. But there isn't a lot of places to go other than the U.S. market. And yesterday was almost a 20 million contract day. And although I don't have numbers yet for today, I sort of do this measure by the phones ringing on the desk across from me, and in talking to the guys on the option side, they all said they were busy today, busier than they've remembered in recent days. So that's all good. Money's coming here.
There are certainly worse things than money coming into the old marketplace. Gives us all something to do, I think, in all of our various aspects and services that we provide. And, speaking of looking farther afield for liquidity, whenever I toss it to Uncle Mike, we usually talk about the same couple of names. We talk about GLD, talk about SLV, talk about Ford, and maybe Apple. And those are kind of it. But I think you're even looking a little farther afield today. Not too far afield. You're not going super crazy. But you are going across the pond from Apple to that other dark horse competitor to them. Once the monolith, now kind of almost the upstart in many ways. That is indeed Microsoft. Tell us what caught your eye out in Microsoft today, Uncle Mike.
It went down a lot.
How succinct of you, sir.
Yeah, that's what I was thinking. No, with Microsoft, what's been interesting with it, these last few days, it actually moved up a bunch on really not a lot of news. Not a ton of news anyway. But with this, it's not a position with which I think I have one client that just kind of on his own has a call in it or something like that. So it's not a huge exposure, but it seems interesting to me with Microsoft moving like it does. Did they actually come out and say earnings early today or something like that? Because I saw earnings for them weren't till next week. I don't know if anyone saw that or not today, because I saw the movement of it, but I didn't get a chance to follow up on it.
It wasn't earnings. It was PC sales dropped 13%. So they blamed it all on Microsoft.
Yeah, but there was another geeky statistic, and that's if you look at the Microsoft leaps, they're pricing a dividend increase into the leap. So there's interesting undercurrents of what's going on. I did a vol and pricing class for an internal group this morning, and one of the questions that came up was talking about forecasting dividends, and we dissected a couple positions, and we looked at the Microsofts and went, oh, they're wrong. Let's play with the dividend. Oh, so to your point, Andrew, yeah, the PC sales, I mean, the last couple of days, all the headlines have been PCs are dead. And I'm not disputing that, but it's interesting that the long-dated stuff is pricing in a dividend increase. So,
I heard rumors like Steve Ballmer might be retiring and things like that, or might be leaving Microsoft. So, I mean, I thought just the fact that Microsoft was up a couple of bucks, we had a little earnings play on in it, just being long the guy. I know you're going to hate to hear this, but buying juice for nothing. It worked out actually pretty good. But the fact that it kind of ran up here, I just was figuring, this is money coming from Asia. Microsoft pays 4% yield or something like that. And that's looking pretty good all of a sudden. And that's where I thought this money coming into a lot of these I think that's what helped drove the Qs up. I mean, all these old school technology companies make a lot of money. So
yeah, that's kind of the secret behind Microsoft. They've kind of lost a lot of their cachet. They're not as sexy as an Apple or a Google from a consumer interest level these days. But they still make a boatload of money on things like Office, things like enterprise services, things that aren't anywhere near as sexy as a cool new iPhone. But they make a boatload of money on those things. And
it's easy to dislike the company, and to both your guys' points, there's been a lot of press lately because they opened that computer museum, and the crew was back together, and they no longer look like pimply-faced kids. Now they look like mature old men, but the cash on the balance sheets. I mean, if you run into a safe haven, Microsoft, Intel, those, they're banks. They're banks.
I remember back in the boom boom go go 90s, the day Microsoft declared a dividend is really where a lot of the bloom came off the rose for a lot of the people, and they said, wait a minute, we're in more of a out of this kind of enormous exponential growth phase and into more of a blue chip phase, and slowly but surely they were correct. I'm looking at the numbers here today from Microsoft. This is the name that's been doing about 135,000 contracts a day, doing almost 420,000 today, just lighting up the tape. A lot of that, 130, almost an entire day's worth of volume on two strikes. These April, the regular, not the weeklies, but the regular April 29 puts and the 30 puts went up 71,000 and 61,000 times respectively. It's like a chunk of that could have been a roll. It's like 95,000 open on the April 30 puts, but still a lot of paper going up today in Microsoft, and surprisingly a lot of long delta paper. They were net long about 2 million deltas, which is a lot for a day like today when it was down 4%. You'd expect that to be on the short side of the equation. I'll have to dig into these numbers a little bit more to see what was behind that. But interesting stuff going on out here in Microsoft. So, yeah, interesting stuff. Uncle Mike, you just loading up on straddles? Is that the play?
Yeah, that's what I'm thinking. Load up the straddles on it.
Back up the truck, pick up some straddles, and then just call it a day, right? What could happen?
You can make money if the market goes up, and you can make money if the market goes down. Why would anyone not trade a straddle? The whole world is dumb if you're not in straddles, I'm convinced.
I think you just hit on a key for a nice seminar, perhaps a newsletter you could put together. I mean, that's a great marketing line. Make money no matter where the market goes. What could go wrong?
I can really cut a fat cow in the. Well, never mind.
Cut a fat cow.
I love that one. I had just spent. We actually did a whole lab on a class just on the straddle of Microsoft last week going into earnings.
Really? And how it's underperformed?
It's pretty funny. Because I was trying to convince them that the straddle can't lose value on the date to earnings, and nobody was believing me. But now they believe me after they closed it.
Microsoft is not a bad name to exemplify that, because of all the names out there, they've been one of the ones that have, in many ways, underperformed their straddle quite a bit coming out of earnings. So it's a good way to look at that, and if Microsoft can do it and still make money on the straddle. What was your argument? What was your thesis? That it was good to be long the straddle going into earnings, or short it coming out?
Yeah, well, what it is you buy something like that, Microsoft, the straddles generally price around, at the money straddles around $1 on the day of earnings. And you could buy the Microsoft straddle actually for slightly less than $1 with not, what was it, about, I'm going to say 8 or 9 days before earnings. So essentially you got to own the gamma for free for a week. And it just so happened that Microsoft decided to take off this week, and it made it a huge home run. But I tried, like when we try to teach people about buying premium, there are smart times to buy it, like when you get to hold the theta for nothing. And there's dumb times to buy it when you're being annihilated by every 3 seconds that goes by during the day. So that is a smarter time to buy theta. And I actually took out we have labs and stuff, and with our gold course, and I'm just showing them how this is going to operate. And everybody shook their head, and a few people did it. And then, then we had people kicking themselves in the head that they didn't trade it. But
so people were actually actively disagreeing with you that these things don't decay going into earnings.
They were. I was telling them. Well, they weren't really disagreeing with me. They just weren't believing it. And then, there's a couple days that went by, and Microsoft moved a lot, and the straddle didn't decay. They're like, well, not decaying, yeah, because the volatility is going to go up 2 or 3 points a day until it gets to be 50 vol 1 day before expiration. That's just the way they work. But they're not. The liquidity provider is not going to give you a straddle for 80 cents, 8 days before earnings, and then then charge $1 for it the day of earnings, because that would make them dopey. They're not going to do that.
Yeah, looking right now, this April 29 straddle, which is exactly the at-the-money straddle, is trading about exactly $1 with about exactly a week to go. So an interesting play right there.
Yeah, the 28 straddle was trading $1 last Thursday. And obviously Microsoft traded, 30 and change. So that was for me enough to hit the exit. I did the old Tosaw and decided to exercise risk management.
You decided to do stuff and close it out.
Yes, I did. The BBI.
What is that ever a good idea?
Oh, just taking your money?
Yeah,
I don't know.
Let it ride.
Let it ride forever.
That's right.
Those option graphs, they say at expiration it's worth this much money.
Yeah, that's what you need to. Yeah, that's the sure way to make a lot of money. Just follow the expiration graphs.
Exactly, and I try to explain people. Okay, for the stock to settle right there. Okay, that's akin to you being Robin Hood and being able to split an arrow over somebody's head. Okay, now look in the mirror. You're not Robin Hood. Okay,
but what if you're wearing tights?
Even if you're wearing tights and a little red hat, it will not happen. Now, it might have happened once in your life, and you might use the rest of your savings trying to make it happen again.
No, quick poll, like with a butterfly. For everyone that's on this broadcast right now, how many times has anyone ever seen a butterfly, whether it's a traditional butterfly or an iron butterfly, expire right at that mid-strike?
Maybe once.
Every month. What, are you kidding me? That's just my life. I think Alex goes back the farthest of any of us. If he hasn't seen it, then it certainly doesn't exist.
Unfortunately, for a lot of those flies, they get there too early.
Yeah.
Yeah, well, all spreads get somewhere too early for the user to be happy. I've seen bizarre stuff, and I've seen it happen, and it doesn't have to make sense. But risk management is still critical in all this stuff.
I think we could do an entire program on debunking the expiration graph, or perhaps the myth of the expiration graph, and how this might be an interesting starting point, but it's certainly not the end-all, be-all. And I think maybe moving a lot of options education away from that fixation on the expiration graph probably could be a good thing.
Yeah, I couldn't agree more. And this is a fight I've had for 40 years about, drawing the hockey stick in the expiration graph. And I once taught in Tokyo, and at a bank that had the most sophisticated tools I ever saw. I mean, they could do the graph 5 minutes from now, and their people had all been taught to write payoff diagrams, how to shape the payoff diagram and to understand it. And let me paraphrase this as best I can. They knew nothing except how to draw the graph. And I think this industry has done itself a disservice teaching people how to draw payoff diagram, hockey sticks. And when you realize that's only at expiration, and very few people are still in the position at expiration for expiration. They're either there by mistake, they're there because they forgot to roll, or they're there because they're crossing their fingers. So I agree with you, Mark.
Yes, perhaps that's a next show, or one of our next shows we should do is debunking the expiration graph. I like it. But now it's time to close on out of this trading block segment and keep on rolling into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, that funky tune means it is time once again for myself and perhaps Andrew and whoever else wants to participate, by all means, to don our fedoras and dive into the seamy underbelly of the options market. Yes, indeed, it is time for the odd block. We're going to kick things off with a little bit more well-known name than some of the other ones we typically highlight in the odd block. This is not some crazy $1 biotech name. This is a name you may have heard of, Yahoo, ticker symbol YHOO. And we talked about some stocks catching a bid today. Yahoo caught a little bit of a bid today as well, up about 1% or about 30 cents on the day to close at $24.49. This is the name that's been on a general upward trend since the last earnings announcement back in the end of January. It's been up about 10 to 15% since then, so it's been a good run, despite some mixed headlines coming out of Yahoo and some interesting acquisitions, some interesting deals as that company kind of struggles to figure out what the heck it really is going forward, because it's no longer a search engine, obviously. It's more of a content and MISC type of company. And keeping in the spirit of that trend, that upward trend here in Yahoo, we saw someone out here thinking that this is a trend that's going to continue for the foreseeable future, because we saw a lot of love for the June upside calls out here in Yahoo. Is that indeed what caught your eye as well, Andrew?
I have to say yes. I've been following the Yahoo stock from I think September, October. It was trading around $15. When I first looking at about their stake in Alibaba, and basically Yahoo wasn't worth a whole lot more than the stake they had in Alibaba, which is that big Chinese, what is it, kind of like eBay or something like that, a giant company. But anyway, yes, it was. I keep an eye on it, and then these calls came across. This is what Alex was just talking about. This is like bull market trading. Somebody's buying out of the money calls 2 months away for 62 cents. I wouldn't say it's an awful trade, but that's pretty darn bullish. 11,000 contracts, look like opening paper, push the volatility up. This is like, hey, it's a bull market time. Very, very impressive amount of buying. That's all I can say.
Yeah, I guess about the only thing really impressive about it is the size. We tend to poo-poo these naked size upside buys as sometimes having a little bit more money than sense when it comes to options. Of course, if Yahoo continues on this trajectory, this will look a pretty sensible trade in a couple of months. I know we tend to prefer here people maybe doing some verticals or doing ratios. I know you, Andrew, poo-poo any outlay of premium, so you want to see this guy do a 1x3 or something here. But regardless, an interesting trade, an interesting trend, seeing some bulls piling into Yahoo. This would not have been the case a few months back. I think a lot of us were kind of talking about the gloom and doom story for Yahoo. Seeing some size money pouring into the upside in Yahoo, perhaps an interesting trend that this company may be getting on the right track, at least in the eyes of this one guy who putting some money on the line.
Yeah, the new CEO. I mean, they paid her what, $40 million or something to come over, and she's already generated about $5 billion in market cap or something.
Yeah, I guess if you look at it from that metric, that she's been worth it. Even though they hired a CEO with absolutely no experience in anything relevant to their business. But hey, that's who needs that?
She worked for Google.
She worked for Google, but she wasn't a manager or anything like. She was one. Well, we won't get into it, but suffice it to say, she was like the fifth choice. They went out to about 4 other people after 3 of their other CEOs had been fired or resigned in the past year or two, and they all turned them down. It wasn't like the Yahoo CEO job was exactly a shining star on anyone's resume they wanted to have. So she was the one who said yes. That's pretty much all they could get. Someone in their mid-30s with no experience. But hey, they threw some money at her, and it seems to be working. Anyway, I won't go farther down that rabbit hole. That'll be for another day. We'll move on to an odd block special type of name. I think you threw this one in here just for us, Andrew. This is Cell Therapeutics, ticker symbol CTIC. They're trading a whopping $1 today, $1.16. So this stock, in and of itself, is an option. However, not to be dissuaded by that $1 price. We saw some size June 1 puts lighten up the tape today, 20,000 times for a whopping 6 cents. This is an interesting one. What do you make of this one, Andrew?
You know what? Honestly, I'm in a state of confusion with this one. The trade went up right mid-market. Vol did go up. So I'm pretty confident they were taking liquidity out of the market, which basically means they were buying puts. It was twice the open interest, so it's clearly not a closing transaction.
Yeah, maybe they were flipping. They went short, and now they're buying it back and saying, "The heck with it, we'll double down and go long."
Maybe, but I mean, somebody had to accommodate this trade because there's no volume. I mean, it trades 1,700 contracts, so. Just a real strange one. It's like, it's one of these little tiny biotechs that basically is starting to run out of money, and maybe somebody just thinks they're, going to go to 50 cents. Then that's all I can see for this type of trade. I mean, why would you buy, unless you own, what did you do? Buy the stock at $1 and you buy the puts at 6 cents to June? I don't know what that's getting you really. But So the reason behind this confuses me hugely. That's all I can say.
Yeah, this one doesn't look that good on either side, really. I don't want to be the guy paying 6 cents for a June $1 op, 6 cents on a contract for a stock trading $1. You also maybe don't want to be the desk facilitating that on the other end, because there's no liquidity out there to hedge that. And B, who knows, maybe this guy knows something on this name, and it could be going to zero pretty quick. Then you're out 94 cents really quick.
Yeah, it's hard for companies to go below $1.
Yeah.
Unless they're the National Bank of Greece.
That takes some work.
Yes, it does. They usually have something that's worth something, but that's what anyway, I thought that was an option pit special.
That is.
And when I see them like that, I just can't help it when they just they're head shakers.
Speaking of odd block specials, we're going to continue the trend here with next up we have ImmunoCellular Therapeutics Ltd, ticker symbol IMUC. This one closed at a whopping $2.56. Up 6% on the day, or 15 cents. This is another one that does no appreciable volume to speak of, and yet today, lighting up the old tape. When we wrote this up this afternoon, it was 3,000 had gone up with these May 2.5 calls being sold for about 30 cents. By the end of the day, it had more than doubled that to 7,000 of these May 2.5 calls being blasted out for 30 cents. So someone putting a line in the sand here saying this far, no farther on IMUC. Not rallying north of 280 anytime soon. At least that's what this paper looks like, unless there was some stock going up with it.
Right. I couldn't find any stock. There's May earnings. Again, this was another kind of questionable one. Why would they sell them now? My sense is that they were exiting a long call position. But the fact that we've had more volume by now, maybe that's changed a little bit. But I saw the implied volatility at the time was going down. So it was a head scratcher for me on what was, that's what made it odd, of course, not quite figuring out what was going on. But with the straddle 60 cents on a $2.50 stock just for earnings and a little dinky stock. So something kind of is going on there. Can't quite figure it out. And I think somebody's taking their money and going on those, but because the open interest was pretty high, it was about 5,800 contracts on a nothing stock. So I guess this is one where I usually go the next day, see what the open interest change is, and get a sense of what this particular guy was doing, to see if they're trying to stretch it out or not.
Looks like digging into it since we wrote it up to 4,000 of the AUG 2.5s went up as well today on a spread. So it looks like some of that volume was on a spread of that 7,000.
Maybe rolled it, huh?
It was rolling it out to August, it looks like. So it's not just a naked sell, but perhaps a roll to extend his love of IMUC out to August. Couldn't get enough yes. Loving by May. He wanted to extend it out to August. Of course, there's 12,000 open on that strike as well. So interesting paper going on here. There's not much to say really in this name, but the few strikes that do trade have some size on them. 12,000,
they're huge.
6,000, 2,000, 2,000. For a little name like this, that's actually a lot of open interest. So
yeah,
there's some stuff to parse here. Hence the odd blockage. Hence the odd name. It is indeed a very odd blockage. And speaking of, we have to keep rolling here. One last one here in the old odd block. We've had some mini BioShare names. Now we're moving on overseas. Seems to be everyone's fascination these days is Asia and what's going on over there. So we have the iShares MSCI Japan Index, ticker symbol EWJ, closing today at $11.34 and up about 1% on the day. And calls were the story again in EWJ. Of course, a little bit different when you dig into the stock picture. You see a bunch of calls going up as a buy right. Now, I know, Angie, you tend to put a little bit more stock in the description of the trade than I do. I've been burned a number of times by them listing it as whatever, a buy right or a price variation or a spread when they don't know what the hell is going on. So,
exactly.
So I tend to look at those descriptors with a very hearty grain of salt.
Well, this was the one for me. What made it at least possible is that the calls were trading on the bid at the time, and I think that has to be a bold sale, selling the 12 calls for 15 cents, considering this EWJ. Now remember, a 1% move in this is only 11 cents, right? The EWJ. This is funny. It's in our little strategy letter. We actually were long a straddle in this. Like another one, we rolled it to the 12 strike because this guy pounded the calls down. because we rolled out, made all the money on the other one, and now we're buying other stuff now for free. So, but this was interesting for the fact that this guy sold these down. So they could be wrong, but I definitely feel like this option trader was a seller at the time. So it might have been marked by right, but it still looked like a sale of options to me.
And he kept it up throughout the day, because when we wrote this up on our site, it was 20,000. A total of 66,000 on the day. So that's some size here in a name that's averaging about 26,000 contracts a day. So we're seeing almost 3x just in that one trade.
Well, see, this was when I wrote this, the stock was printing 11.41, and those calls were trading for 15 cents. And the calls are actually trading higher now with the stock lower. So that's why I was saying that I think that was a sale down. And since then, and I think we wrote up some other EWJ this week, but there's just been continual buyers of calls in this goofy little thing. And, just maybe they think this is going to be power higher to some of the highs of last year, like 1160. And, maybe this is when the Japanese market breaks out. Who knows? But all I know is this thing keeps moving up. So
yeah, looking at June open interest on the call wing, there's 42,000 open on the June 10s, 44,000 open on the June 11s, nearly 40,000 open on the June 12s, with another 66,000 going up today. Maybe a lot of that closing, but still, yeah, a lot of call paper. Lighten up the old tape here in EWJ, so perhaps a trend to be spotted in there as well.
That's what I figured. We like that kind of stuff. Trying to find a new trend.
Trying to find the trend. That's what we do here in the old Odd Block. Unfortunately, that's all the time we have for wearing our fedoras today. So, Andrew, unfortunately, you can't wear it for the rest of the show. I know you like to, but
I do have my shirt on.
You have to take it off now. It's only allowed in Odd Block time. And now we're going to keep on rolling into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, the portion of the program where I hand the reins over to the Viceroy himself. He doesn't have a cool fedora, but he has a jaunty Viceroy cap. Picture that how you will, listeners. All right, Alex, what was going on? What caught your eye over there behind the curtain at Options Express?
So a handful of names were visibly active today, and I mentioned Chipotle, Priceline, Facebook, which had been quiet for a while, back up here in the 28 area. And, of course, the fruit company was all over the place today. So there was a fair amount of activity in that. I also was remiss in the last show, as I got reminded in an email by one of the listeners. I talked about the April 15th deadline for IRA funding. April 15th is also the deadline for Section 475, the mark-to-market election. And I know that's a little bit arcane for some people, but if you are electing mark-to-market, you have to have the election in by April 15th. So everybody, please be aware of that. Other than that, the tone last couple days has just been better. The phones are busier. Those moments I get to either lean across the desk or chat with the guys and ladies on the trading desk. And, does that mean the public is coming in? Yeah, that's our customer. And this is where all the technical gurus will say, if the public is coming in, that's a clear sign of the top. It's the old joke about anytime there's a bull on the cover of Time magazine, you sell. Anytime there's a bear, you buy. And for those of you who are saying I screwed that up, no, that's the sentiment indicator. But the tone's just been better the last couple of days. And, this kind of broken record that we all are, new highs in the Dow, new highs in the S&P, obviously not new highs in the NASDAQ. We got a way to go to get back to the pre-tech wreck NASDAQ. And volatility keeps trickling lower, but those are the makings of a bull market. So that's much of what was going on today. Yes,
that tinfoil burrito company, aka Chipotle, lighting up the old tape today, down 3.5% or $12 to $3.31. I've often jokingly referred to that on the show as the stealth apple. Kind of lost some of that luster when it got a lot of its value chopped out last year. It has since gained quite a bit of that back, trading at $3.31 today, closing at $3.31 today. So it is kind of back in that Apple range, particularly now that Apple has sold off aggressively as well. They have some earnings coming up, which we'll get to in Around the Block. But yeah, an interesting one to watch. That's one I was very active in for a very long time. Kind of been out of it of late because, like I said, this one whipsaws so much my day-to-day time to manage my positions. Being so limited, this is the dangerous one for me to be in. But an interesting one to watch and to play, particularly this week coming up with earnings. All right, thank you for that, Mr. Alex, for diving deep into the minutia of some of the elections you need to make coming up on the 15th. But we can always count on you for that stuff, sir. And we're going to keep on rolling with the show right on into the strategy block.
The strategy block.
All right, and welcome to the strategy block. That dignified music means it is time once again for Uncle Mike to stroll on down from the mountain, put on his smoking jacket, and recline by the fire, whiskey or perhaps bourbon tumbler in hand, and dispense some options, wit, and wisdom. And Uncle Mike, I don't even need my birdie network today because I know that something we said earlier in the show really resonated with you, and it's been kind of stewing in your brain ever since, and that is, of course, the subject of the expiration graph and how it has just dominated options education and options, retail options trading particularly, for such a long time. And I'm guessing that really sticks in your craw, sir.
Well, it not necessarily sticks in my craw, but it's kind of like saying that all football is offense and defense and special teams don't exist. So I guess the graph itself doesn't stick in my craw. What sticks in my craw is the incomplete understanding out there of people who use only the graph.
But really, who needs a punter and a field goal kicker? You don't need those guys.
Oh no! I meant more the defense or of the special teams, the guys that fly down there and knock people's heads off.
Okay,
I agree with you. Yeah,
the line breakers.
We don't punt. My son's flag football league. Even if they allowed punting, I wouldn't do it. I'd go for it on fourth down every time.
4th and 30, we're going for it.
Why not? So, anyway, which actually leads me to another thought in terms of risk management. It's kind of like if you have no risk management, it's kind of like putting 11 men on the line of scrimmage with no linebackers or safeties and saying, "Well, don't you have confidence in your defense to get the sack?" That's kind of the equivalent of doing a trade, or an investment without some type of risk management. But I digress. Anyway, the risk graph. When I was at Options Express, gosh, it was a little over 4 years ago. It's amazing how time flies. I worked there for probably about 4.5 years. And in my estimate, I probably had at least 10,000 one-on-one conversations with people. And since then, in the last 4 years, since I've been an investment advisor, I haven't even counted. I've been too busy to count such things, I guess. I don't know. So my point is that I've talked with a lot of retail investors throughout my career. And one thing that I've found is that a lot of people like to do the credit spread. Now, I have no problem with the credit spread, but the problem that I do have is the lack of understanding of the credit spread. A lot of times what people will do is they'll look at the expiration risk graph, see that little S or the Z, depending on what way you set it up. And the assumption is that, okay, so long as we stay above that short strike price, whether it's a bull put spread or stay below the short strike price, if it's a bear call spread, I'm okay. It's mathematically impossible to lose money because this is all going to expire worthless. So with that in mind, what I want to talk about today is the importance of having an understanding of it and what your real risk is. Because let's say, for example, that you're just looking at the expiration graph and you're thinking, okay, let's say I did the 40-45 put spread and I'm short the 45 puts and the stock's at 52 right now. Okay, not a bad trade. It's a pretty high probability you believe that the stock's going to stay above 45. You do your analysis because it's bouncing off of support. Earnings were good. Whatever the case may be, you have a bullish sentiment on the stock, and you still have 7 points of leeway until your obligation comes into play within that bull put spread. So it sounds pretty good on paper. But let me talk to you from someone who's actually made at least one trade in his career. When things like that happen, you need to have an understanding of what I'm willing to lose on the trade. So let's say that you're getting a $1 credit for that $5 credit spread. Okay, you're risking $4 to make $1. Okay, that's the expiration risk graph. Now, as that's going on, you're thinking, well, I'll just get out of it then right before it hits the 45 level. I'll get out if it's at like 45.01 or something like that, and that way I really won't lose any money. So we kind of turn a blind eye to what some of the risk is on this. So I won't actually lose $4 because I'll just never let it go in the money. Now, here's the question that if you ever do out of the money credit spreads like that, I don't care if you're doing condors or just one side of it, or even short option, even just short puts for that matter, if you're looking to manage the risk on this, how much are you going to lose when it gets to 45.01 or 45.30 or whatever your stop point is on that trade? I always told one of my favorite tools at Options Express when I worked there, when I show the website to the masses, I always liked the pricer and the trade calculator. What the trade calculator is it's an expiration risk graph in and of its basic form. It's under the toolbox tab. Correct me if I'm wrong, Alex, just memory serves. It's what I remember it at. But with that, I love that tool in that it's good because it'll show you what the risk of the trade is. Now, if you just look at the expiration part of it, it's hard to determine what your real risk is. There's other parts on there to where you can modify the date on there to actually show what your risk is based upon a different date. There's also tools, and even within Options Express, that you can use to modify what the volatility may be. If you believe that the stock could go down to 45.05 or 45.07, whatever your stop loss point is, you have to have a prediction, or you at least have to have a sentiment on where the implied volatility is going to go to modify those prices as well, and a sentiment on when it's going to happen. So, for example, if the stock goes from 52 down to 46 between today and tomorrow, and you have a May expiration credit spread, well, if that's the case, probably going to bite you pretty hard. But if it waits until the day before expiration, probably not going to hurt quite as bad. So with that in mind, when you're using the trade calculator on Options Express to kind of go through these, don't just look at the expiration risk graph, look at what it's going to actually be the next day. So that way you know that you'll have a better understanding of what your risk is going into the trade. Because if you're only expecting to lose $1 of that $1 credit you got, maybe you're thinking, okay, I'll get out for $2 debit, so I'll have a $1 loss on the trade. If that's what you're expecting, you might be in for a nasty surprise if it happens sooner than you want it to happen. So on there, if you're doing a spread, oftentimes people think that, oh, I'm doing a spread. All I got to do is put the spread on. So long as it stays above 45, I'm fine. Let's go to work. Not the case. I'm not saying don't go to work unless you trade some really good spreads. I don't know. But what I am saying is have an understanding not only of what the price can do to you, but also have an understanding of time as well as volatility. People think that spreads are just set it and forget it type of trades. I disagree. I think that spreads, especially credit spreads, are trades that need to be monitored even more closely than other styles of trades. And you do that by using the expiration risk graph as step one of about 12 steps. We'll make it the 12-step program. So with that, that is one to grow on, folks.
The Uncle Mike Tosaw 12-step program for options premium sellers. So you're saying you don't subscribe to the Ron Popeil strategy of options trading, which is just set it and forget it and move on to the next thing. You subscribe to more of the Andrew Giovinazzi do stuff approach.
I try to anyway. As I've said in this show, I've torn up many of my kidneys doing stuff.
Yes, the old BBI. We'll have to check in on that again in our future shows. I know many of our listeners are very curious about your bathroom habits over there in the St. Charles office. All right. And before we go too much further down that rabbit hole, we're going to close out the old strategy block. Thank you, Uncle Mike. You may now put the old smoking jacket away. Until next week, we're going to keep on rolling into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is our final segment where we highlight what's coming up in the week ahead that's going to catch our eye, or in this case, going through the rest of this week into the weekend and into the following week. And next week is really where the action is. We're getting into the teeth of it now. We're getting into the heart of earnings season. A lot of our listeners love to trade options on the tech names. It's just a very high level of consumer interest in those names and in trading interest in them. And of course, that's where the action is next week. In fact, next Friday is pretty much Earnings-palooza for a lot of our listeners. On the 18th, we have Microsoft, we have Chipotle that Alex was just talking about, the old tinfoil burrito company. Will they get cut in half again? Will they rally to the moon? Who knows? We'll find out next Friday. Citigroup on the 15th, Google on the 18th as well. Bank of America, Grigas just rolling in the dough on that one. I remember not too long ago when he was on the show complaining how he got in around 8. I believe he sold the 8 puts and was sitting on it for such a long time. Now printing money yet again here on good old Bank of America, trading 12 and change today. They have earnings next week on April 17th. Intel, my old stomping grounds, on the 16th. Nokia, trading a whopping $3 these days. Also on the Friday the 18th, IBM, that name we don't talk about that much anymore. Not so sexy from a consumer perspective, but still another company that makes a boatload of money on less than sexy services behind the scenes, enterprise services. They're also reporting on the 18th. And of course, last but certainly not least, Goldman Sachs, the name everyone loves to hate in the financial realm anyway, reporting on the 16th. That's just a few of the names reporting next week. It truly is Earnings-palooza. I know, Uncle Mike, you're gearing up already for Apple earnings, which are on the 15th.
Oh, no, they were today. Didn't you hear?
Oh, I missed them. They reported. Quickly, let's go to the live Apple earnings update here on the old audio.
I'm not
I don't mean to be
falling for the
difficult.
banana in the tailpipe trick again.
Oh.
I'm not doing it.
Are we sure about that date? Because I show it the week after.
Oh, my mistake again. We always make a mistake around Apple earnings here.
Yeah, one time Mr. Smart Guy emailed me the wrong date by mistake, and I had a lot of deltas that I was concerned with that I had a greater concern with after I saw somebody's email that day.
Sure, by mistake. Sure, accidental. Yeah. That was
JP
in no
Morgan
way intentional.
tomorrow.
Yeah, JP Morgan, of course, the whale. We didn't get to that earlier in the show, but this time exactly last year, they put out their letter slamming, of course, all the regulatory changes being put into effect in the marketplace. A day or two later is when all the news broke about their ridiculous whale trade coming out of London that nearly broke their firm, ended up costing them nearly $7 billion. Taking a much more contrite tone with their letter to the shareholders today, Jamie Dimon, of course, coming out and saying essentially that they screwed up, very embarrassing. Still refusing to step down, but it is kind of what drives a lot of the people on the retail spectrum crazy to hear a guy like him slamming regulators in a letter so haughtily a day or two before they announce their own ridiculous, stupid losses on a stupid trade coming out. That kind of hypocrisy really tends to rub people the wrong way. He, of course, refusing to take the honorable way out and step down, still clinging to power over there, but taking a much more contrite tone today with their letter to shareholders, and hopefully that will lead to some improved risk controls. I don't have a whole lot much hope until these banks get hit individually. They're going to keep gaming the system. They're going to keep writing premium for all it's worth, because we all know what could happen. What could happen when you write straddles? Look at Nick Leeson. It worked out so well for him. Look at the wow.
Well, those guys just ran out of money.
Yeah, exactly. They couldn't keep selling long enough for it to come back in their favor. That's all it was. It was just a timing issue. So yeah, interesting stuff. Anything else you guys are watching next week? Andrew, maybe we'll start with you.
You kind of hit everything. I mean,
hit them all.
Well, yeah, and we're looking at see how normally the vol starts to come in a little bit through earnings, and it looks like it already has started to come in. So I find this an interesting state of affairs. Also, too, obviously, if you're looking at see how the bonds are holding up now that it looks like Mr. Bernanke kind of let the genie out of the bag a little bit. where they're thinking about lower, maybe possibly not buying so many bonds anymore at some point. So, that's caused a pretty sharp sell-off from last week when the Bank of Japan announced that. I don't know if anybody's seen that, but it has been since we had a sell-off in bonds like this. The last time was actually the beginning of March. So it's been that long since we've had this kind of a sustained sell-off, from a kind of a peaky top in Treasury. So let's see how long this lasts.
I like that, peaky, a very technical term.
Peaky. Well, everybody throws around all those double head and shoulders and doji triangles and stuff, and I thought I'd add my own.
But the green triangle is pointing up. It means you have to buy. You don't understand how this works, Andrew. All right, Uncle Mike, take us home. What are you watching for this week?
It's just everything that was said earlier. Nothing new. We're in the 'tis that time of quarter again. Earnings fest is here again. So yeah, that's pretty much it right now.
So the great premium sale has begun at RCM as you blast out puts going into earnings, correct?
Not so much.
Not so much. Okay. Alex, last but not least, sir, anything catching your eye in the week ahead?
All the earnings, obviously, that we've talked about, but I'm keeping a close eye on rates. And I think if that Japanese rate dips again, it'll continue to bode well for our market. But I would like to see our rates hold or even rally. I'd like to see the 10-year get back up around the 2 level.
Yep.
And so closely looking at macro issues, I mean, I hate to make it sound like this is a macro rally, but this is a macro rally. And I think it's macro issues. I think Europe has, for the moment, become a non-event. That's, as soon as that's out of my mouth, I realize there's all kinds of things that could change. But I think right now it's Asia and it's earnings. And I think if earnings are decent, we continue to be the safe haven and we'll see money come in. We'll probably see gold tick lower. Net gas a new high. So looking at macro issues.
Once again, turning us into Wall Street week, sir, but we appreciate that. It's good stuff. Thank you, Alex. Thank you, Andrew. Thank you, Uncle Mike. That, unfortunately, is all the time we have for this week, but we can squeeze in a little bit more right here at the end, where I like to check in with all my cohorts, my partners in crime, to see what they have going on that may interest you directly, the listener. Starting off with you, Uncle Mike, what's coming up on the webinar train for next week?
We have a mystery guest for this coming Thursday.
Ooh, is it the Riddler? Big question mark?
No, it's not the Riddler. It's not the Joker, nor the Penguin, nor Shame, nor Mr. Freeze. Couldn't quite contract them. However, what we are going to do, we actually had our webinar for this week cancel, and I'm going to find someone else tomorrow, and we're going to get an interview on Monday. We're going to get someone on the show on Thursday, and we are excited.
Uncle Mike working behind the scenes to get you great interviews, listeners. Shame you couldn't get Mr. Freeze, though. My little guy would be all over that webinar if you got him.
Oh, we like the Penguin in my house.
My little guy loves Mr. Freeze. I don't know why, something about Mr. Freeze, but yes, we'd be all over that webinar. So look into that for us. That'd be great.
I'll see what I can do.
The seminar on freezing. That'd be fantastic. All right, Mr. Andrew, what is coming up in the land of the pit?
Well, we do have this seminar with Russell Rhodes of the CBOE on the 20th, and we would like you all to attend. Actually, I think there's a few slots left, but as usual, if you do sign up for it, go to www.optionpit.com/events. And if you sign up for the Gold course, I believe Mark will include this with your subscription. So it is a fantastic event to learn how the VIX actually works and how to trade the options and futures. That's our biggie.
Thank you, sir. And last but certainly not least, Mr. Alex, what is coming up in the land of OX?
So this Saturday, we're taking our all-day live event, which we don't do in April because it's tax season, and we're going to do it virtually on the site. So 9:30 Saturday, just come to optionsexpress.com, and you can do it in your slippers from home. We're going to do our one-day live event virtually on the site, and the event is free. April 17th, after I get my taxes filed, at 3:30 Chicago, we're going to do an Ideas Hub webinar. we'll revisit the Idea Hub, and I'll talk a little bit about some of the enhancements we've got working there. As I've mentioned, futures options are in development now, and that will be coming out there. But we're going to put up some time spreads. We're going to mix things up a little bit in future builds. So a couple webinars coming up in the next few days.
Check out those webinars, listeners. I think you'll learn some interesting stuff from the boys over there at OX. And last but certainly not least, I mentioned the options news rundown at the top of the show. Here at the bottom of the show, I'm going to mention once again that seminar we have coming up, the Unusual Activity Forum, on May 15th here in Chicagoland. If you're going to be in the Chicago area, we'd love to see you down at the CBOE. Join myself and Mark and a bunch of great options experts as we dive deep into the world of unusual activity. I haven't decided if we're all going to wear fedoras or not. Perhaps we will. That'd be a fun little bit to add to the show. But of course, you also get the floor tour, a bunch of great software we're including at no additional charge just for signing up for this event. It's going to be great. Space really is limited. We're holding it at a very space-constrained area of the SIBO in order to fit all the stuff in we want to do. So by all means, if you're interested in this, you're going to be in Chicago on the 15th, then let us know. Surf on over to theoptionsinsider.com/events where you could register and you can come on down and check out for yourself how we do all this great unusual activity stuff. And on behalf of Andrew and Alex and Uncle Mike and myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the Option Block and making it such a great show and such a fun show to be on. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.